Hello, traders. Can everybody hear me? Type in the chat if you can hear me. All right. Too loud, too soft, or just right, guys? Getting lots of noise. Okay, how about that? Is that better? Okay. And then can you guys see in the chat box where I put testing, can everybody read this? Can you all read that? Okay, let's just give it a couple minutes for everybody to sign up. I just wanted to make sure this was working correctly because last week we had, a little bit of a technical issue. So just hang tight for a little while. We'll start in just a couple minutes, guys. Okay, Josh, I just changed it from high HD to medium HD. And did that change the screen for you to better quality? Because I'm using a little bit less bandwidth now. Perfect. Okay, we'll go with that. Just give me about one more minute. I'll be right back, and then we'll start, guys. Okay, everybody, thanks for coming out to the webinar tonight. I really appreciate it. Just go over a couple things. We'll go over the disclaimer, of course, so just take a minute to read that before we get started. Okay, so a couple things, guys. I wanted to talk a little bit about what we went through last week. Just to take a look, if you weren't here, we went over the SPY ETF, and we went over some of the analysis on that, and I stated the opinion based on Edge that I was bullish the market for a potential swing to make a new high. I believe by the end of the summer, we'll be at an all-time high in the SPY and in most of the major indexes. And what's very interesting is, you know, I had a couple emails from people who were stating the fact of, you know, how they're extremely bearish, and they were pointing to the fact that here on the daily chart, which is the right chart, we had a little bit of a continued downswing before we started in the upswing, and immediately when it was going down, I got emails saying, you know, look, you were wrong. The market is not bullish. And I really want to try to clarify something that I think is the utmost importance, which is when we are talking about trades and we're talking about swings and we're talking about a bias, we're talking about probabilities and not absolutes. The only edge we have is thin. Anybody who says their edge is not paper thin, you know, let me see the proof to that. Most of our edges are very, very thin, whether they're quantitative, fundamental, technical, or a hybrid of all of them. Even discretionary trading, which would be very hard to quantify, but I don't think intuition would give you an extreme edge, but it would give you an edge. So I really want everybody to think of probabilities. You know, this isn't certainty. You know, we are talking about what's probable, not what's possible. Another thing, you know, not to, and please, you know, everybody may, you know, fully understand this isn't coming from anywhere that's fed an ego or anything like that, but the market did not have a downstring. We are still exactly where the analysis played off. Our bullish bias is still there. It's still set up. We had a great close today to reinforce it, and we're still more bullish now than we were 2 weeks ago. So not saying that we will absolutely guarantee make a new high by the mid of the summer, but probabilities tilt those odds to that favor. And I just want to make sure everybody has a real clear understanding on when you can take the time out and call a direction in the market. You know, it's definitely not written in stone, and it is in probabilities. So just want to go over that a little bit. To piggyback off of that, we are still bullish on the major stocks, on the indexes for the stock market. Nothing really has changed since 2 weeks ago as far as the analysis. We did have a little bit of a downswing intermediately, which we knew what was coming, and we are still primed to make a new high. That's what I will be focusing my attacks on, and what I will be trying to factor into my trading plan within the next couple of months. Any questions on that large amount of data that I just spewed out so far? Okay, so we will go ahead and just move right along. I had a couple people email me on exact trade setups, and what I'm going to do is I'm going to run through some scans, and we're going to take a look at the market together. Does that sound good? And somebody just reply that that does sound good. I just want to make sure the volume's okay. Oh, can everybody hear me? Mike, I just adjusted the bandwidth, so hopefully that will help. Mary, are you on a desktop with like a normal computer screen, or are you on a cell phone or something? Yes to what? Desktop? Okay, how is that? Heath, I just did that. I should be at 1080 HP right now. Oh, the viewers need to do it. Okay, so everybody in the chat, click on the gearbox on the lower right screen and go to HD. Mary says she can't find the gearbox, Heath. Lower right on YouTube window. Okay, I think we're good. Mouse over it reveals the gearbox. See? Traders are so smart. Love you guys. I was very delayed, Josh, but thank you. Okay, great. I'll try to remember to put that in the chats for instructions on the next one, just in case we need to do that. So, okay, so I really want to take my time and try to inject some of the intuition and feel of the markets while we go through this together. So if it seems like I'm going slower than maybe I should, I'm probably doing it on purpose. So let's go right in onto it, and we're gonna go take a look. So I'm in FinViz. I'm gonna go ahead and screen with the target price above price. And I'm going to screen for the volume. If you just click on the volume and click on it twice, that's going to automatically put the highest volume assets up top and work its way down to the lowest volume assets. The only other filter we have is the target price is above price. If you don't know what the target price is the mean price of the fundamental market analysis. So whatever their mean is what the target price is. That gets refreshed and adjusted every Monday morning when the market opens, just so you know, through FinViz. Other screeners could use a different parameter. I'm not sure, but if you use FinViz for some of your screening, that's what it's going to come to. We're going to click right into charts and do a visual scan. Just so you know, on FinViz, right here, you got candle, line, and technical. If you click on candle, you could switch it to a weekly time frame if you don't want to scan on a daily. And then you're going to get a lot more. It shortens your screening graph by quite a bit. So you could get a lot more assets per page. If you go back to daily, you could then keep it at just blank candle, or you can click on technical, and technical gives you a bigger time frame, kind of a landscape time frame of the data. So to run through this analysis, we'll just go ahead and do it with the technical on the daily for now. And we're going to start looking at the biggest volume traded stocks. So currently we have Apple, which is bouncing off of a resistance level. So I'm going to type in Apple under our charting. Maybe not. And to the left, I have the weekly. To the right, I have the daily. We have a clear descending triangle on the weekly. And we have a major support and resistance line right here at the bottom, which we just broke through. And the immediate market, the immediate price action after breaking through that level is a reversal. You know, this is a classic Wyckoff spring, which is an old technical trading technique written 70 years ago. So we have, not to say a bullish bias on Apple necessarily, but we do show signs of buyers stepping in below this level. We even had a gap up on the daily, and we are showing buyers stepping into the market. Now, is this a particular time to buy Apple? Per the edges, no. But will that lead to the overall market bias? Let's just keep looking. Bank of America, which is a BAC, right now the financials are completely short biased. Sectors do matter, industries do matter. Currently, I have a short trade in stock ticker C. God, I think that's Chase. I don't even know what I know the ticker, I don't even know the stock. Citigroup. Currently, I have a short trade in Citigroup, so I am still feeding off of the short bias on financials. So even though we have a long bullish outlook, it doesn't mean we're not going to hedge and also go short. It just means we're going to have more longs. And okay, thank you, Josh, for telling me that. That does help very much. Lending Club, another financial, and of course, in the toilet stock. VRX, which we had a short bias on. Obviously, you would have to be crazy to buy that stock. The only thing is the recent pullback it just had was not deep enough. So let's take a look at that. In this general red area was what I was hoping for in the pullback area for VRX, and the market clearly did not give it to me. The selling pressure of VRX is so strong, the market didn't the pullback didn't have near enough strength to get to a level that I was scanning for as you could tell on the weekly and the daily. It really just shows the strength of the selling pressure on this stock as it completely tumbled. One of the things with this is it was almost a perfect example of George Soros's theory on reflexivity. If you have not read the book, The Alchemy of Finance, please do. If you're anything like me, not only will you feel very inadequate after reading that book, with politics aside, the guy's a very smart man. Incredible. But anyway, not to get way off wide glide here. Oil, of course, we are obviously still playing the short side on oil, as there has been no real significant institutional buying currently in the oil markets as of yet. JCP, we actually did have our eyes on in a scan for longs, but it was slight. If you look at the weekly time frame on the left, we are in a larger downtrend. This late swing that happened just recently, that had some strength to it, as you could see on the daily time frame, but the market just collapsed after, and no additional buyers stepped in. Facebook has been is still long. It's going to be long forever, it seems like. Still long, but no scans on it. It's just a creeper. There's no statistical edge in it for my time frame as of now. General Electric, we were long on the previous screen, but not the current one because it's still in the pullback. We were extremely long on BAX, but there was no pullback. It just grinded higher. Vail is a current stock that I have in my watch list as we speak. So let's take a look at Vail. So as you can see, I already have my drawing tools on there. So you can see that we broke the major trend line on the weekly. We had an all-time high on the MACD here. So we do show significant buying pressure entering the market on Vail. Now, this is a financial stock, so we do have to keep that in mind since the sector and the industry is not performing well. Is it okay if I had one short on Citigroup and one long on Vail? Absolutely. Do they hedge each other out? It's possible. Can they both work and be profitable trades? Absolutely. However, I have not been executed on my long on Vail, but I have executed on my short on Citigroup. So as you can see on the daily time frame on Vail, the buying pressure that stepped in was high, and it takes a large amount of money to move a market that much. So is there institutional interest in Vail? It appears to be from the price action. Currently no entries yet, but we are watching it. Siri, range bound, which has been forever. Okay, still interesting one. If you follow materials, large institutional buyers have stepped in since mid-December and bid the market up pretty high in a very nice rally. As you can see, broke the major trend line on the weekly and the daily. Momentum high on the MACD. Standard deviation is pretty high, so it could show a period of consolidation, but we are keeping our eyes out for another leg up. We got a pretty deep pullback. Our risk to reward would be beneficial, so we are keeping an eye on materials. I would really like to see the sector picked up before I take the individual. Pfizer, which healthcare was the lowest in the sectors for a while, and then Pfizer, all of a sudden, when the SPY indexes and all the major stocks were tumbling, Pfizer had a large increase in price. So let's go over this stock real quick because it's important. Let me get rid of some of my drawings. We are still aware. We're definitely not blind. That we got somewhat of a downward slope in the weekly. Why are we going to ignore that downward slope in the weekly? Because we have an all-time high in the MACD, which is very large, which shows a large amount of institutional buying has stepped in Pfizer. Of course, the daily time frame shows that, shows that quite well. As you can see here, the market has rallied quite a bit since February. So we still have our eyes for longs currently in Pfizer. If we discovered that this current pullback met some of our trading parameters, is it a potential long here? Well, of course, it depends on your trading style. But you do have a small bull flag that's set up for potential break to the upside. Since that is a potential trade to some people in some time frames, does anybody have any questions on Pfizer? Let's take a little bit of a look on the fundamentals of it. So let's say we have the idea of being long on Pfizer, which correlates with our long on the SPY to make new highs. So we have a bias long side. We have institutional buyers setting in or buying the asset. So we have an imbalance of buyers in this market. Any edge we have could be related to an imbalance of buyers or sellers. So if we have an imbalance of buyers and we have a pullback, a daily bull flag, really the question is this going to be a simple pullback with one leg, a complex pullback with two legs? Is the pullback deep enough for our risk to reward ratio? If we were long here at the close of this bar or at the open of tomorrow, the most recent highs here, will that be our next target? Or would we measure the swing? And go there. So we have two profit targets, one very close, one far away if you wanted to do a measured move objective. If we took the one up here, which is just above 37, that would be an all-time high. I would put it a little bit less. So we have a potential swing from there to there on the weekly, on the daily, either short or long. And that is a potential trade idea. Let's take a look at fundamentals. We will click into Pfizer and let's just read a little bit. Let's spend our time reading about this stock. So currently it pays a dividend, which is always good to the institutional investors. It's got 97,000 employees. Does it have room to cut employees? Wall Street seems to like lean and mean. I would think there would always be room to cut employees. It's optionable, it's shortable. That really no statistical edge there. Our forward P&E is in the green. It's above the 20-period moving average, which is the green. Earnings per share this year is down. Earnings per share in the quarter is up. It's above the moving average 50. It's above the moving average 200. And then there's the target price right here, which is $38.55. So the target price is all the way up here at $38. So the average, the mean of most of the analysts have a target price of $38 on this asset. And we can potentially get in on a long swing at 33, 38. So that's all good sign. What about what really matters? How's the stock performing? It's down for the week, but it's up for the month, the quarter, the half, and the year. If you were to count most of the items in FinViz's box, they're mostly green. So we have not a lot to persuade us that that would not be a potential swing of probabilities pointing to the upside on Pfizer. All in all, our analysis is complete on that one stock. Does anybody have any questions? And I'm going to give it a minute for your questions because I think they come in a little bit delayed. So let's digest that for a minute. Okay, I'm going to talk about something, and if any messages come through, I'll be sure to look. With that said, the reason I am not long in Pfizer is because my trading style likes to take partial profits or all of my profits at the nearest high or low, depending on if I'm long or short. So on this asset, if I was to enter at the open of tomorrow, which would be around 33.40, my nearest high is very close. So if I entered here, my nearest high is 44 cents away. My stop would be $1.41 away. So I don't even really have a one-to-one risk to reward ratio. Now, could I use the measured move objective to 37? Absolutely, I could, but I prefer to take either partial, half, or most of my profit at the nearest high, depending on the trade, depending on the situation. So is this a setup that I particularly am in love with? No. Should you have an opinion in these things while you're new to trading? Probably not. You know, your instincts are probably work against you while you're new or not successful. It's kind of like professional poker players. You know, they make the wrong moves until they've spent years and years trading. Another thing, which I'm going to go through with you, is the length of swings, which is important. So if you take a look, we have a large swing. The second swing is not as long, and the third swing is not as long. So our swings are getting shorter to the upside. There absolutely is a statistical edge to triple tops failing. We also have a triple top. So based on that new information, the length of the swings, this would not be an ideal setup for my trading style. Okay, Ying, I don't know about IBB, but let's take a look at it real quick. So Ying had a question about biotech sector, which I have not followed recently. So let's take a look. Let's do a little bit of analysis, and then Mike will get to your question as well. This is an index fund, so hang on here. Let's go to FinViz first. performance is down all the way around. This investment seeks to track, and you should read these. They're very good. The investment seeks to track the investment results of the NASDAQ Biotech Index. Okay. It's listed under financial because it's the exchange traded fund. So let's try to find some biotech stocks and see how the market in general is doing. We are going to screen the same way, but this time with no target price. And let's just take a look at the charts. Let's do a visual scan. Okay, real quick exercise when you're scanning. You could cheat. You can cheat and go straight to the groups and straight to maps and look at biotech. You can cheat, but I want you to stop cheating. Stop the shortcuts. There is something that happens when you take the time and look at 500 charts a day, when you take the time and read the description on the stock, when you take the time and look at all the fundamentals, when you take a time and look at the chart. Don't rush. Take your time. Don't scan. I'm not talking about scanning like we are. I'm talking about shortcut scanning. Like, I want to find stocks that made a new MACD high. That would be a shortcut scan. I don't want you to do that. I don't want you to think that way, at least for a long time. Okay, so first stock, is it in the top half of the chart or the bottom half? It's in the bottom half. Second stock's in the top, third step's in the bottom, fourth's in the bottom, fifth's in the bottom, sixth's in the bottom, seventh's in the bottom, 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 bottom. So you can tell from the first page that biotech performance is really poor. So I would not be bullish on IBB. Mike, I do not use fin levels, but I do use the FinViz, or my God, I can't even talk right now. I don't use fib levels, but I do use the FibLib tool with a couple things. I'm going to show you. We're going to go to PFE, and I will show you why. Give me a second to just change the properties on it. I help if I hit the save button, huh? Okay. Oh my God. I hate trading software sometimes. Hang on, just crashed. Do. I think using this bandwidth, because I have it in HD, I think it slows the computer down a little bit. And I have a really good computer. 12 gigabyte RAM. But still. My goodness. Come on. Okay. What was I saying? I don't even remember. Oh, I remember. Okay, hang on. I lost my little doohickeys here. Okay, so let's take a look at Pfizer again on the daily. I personally like my pullbacks between 25 and 75%. So that's between the green line and the red line. I do know there's added liquidity at 50%, and there are market maker models that will project balance at 50%. So if an asset tends to balance above the 50% line or below the 50% line, or if you have a pullback half the length of the original swing, that does make sense. So the only levels I would use are the 25, the 75, and the 50. And I like my pullbacks to be in between those retracements. As you can see, that's another reason why I'm not currently long on Pfizer, because it didn't pull back far enough for my liking. Does that mean that that pullback isn't necessarily a good thing? No, not necessarily. Statistically, all it means is if you have a pullback between 25 and 75%, which is a huge margin, but once you get really good at trading pullbacks, that margin doesn't matter. The statistical probability of the same length of swing continuing is high. If you have a pullback between 0% and 25%, the chance of you having the same length of swing for the next pullback is a lot less. So that's why I like the 25 to 75% pullback, but I don't use actual fib levels. Okay, let's move on. Where were we? Is this biotech? Yep. There we go. Okay, remember we did fundamentals on, I'll just have to get back there now. I lost it. Give me a second. I think we were on like the second or third page. Oh, nope. So we only got to page 1. Let's go to page 2. Heath, me too, but I just do 1, not 2. Sorry. Okay, so let's look at Intel. Pretty range-like. Ford, just so you know, not to, sounds like I'm bragging, which I'm not bragging. We were long at the pivot of here on this swing, and we took profits at our high. So that's an example. I'll pull this up in real time. We were long here, and our take profit was here. So we had a nice swing in Ford. Of course, all correlated to our same long bias and SPY. So that would be another example of one of our long trade setups that we recently had. Currently, there's no long setup. What is going on here? There we go. Okay, let's take a look at Cisco. Okay, I don't know if you were here 2 weeks ago, but this is what I really like to see. In the weekly chart, we have a pretty shallow retracement on the weekly chart. Again, like I was saying last 2 weeks ago, we have a nice triangle pocket of liquidity to the upside. Do markets tend to gravitate towards those levels? Absolutely. There's a large pocket of liquidity there. There's a lot of options. There's a lot of defense. There's a lot of order flow in that pocket. Will the market gravitate towards that high? Absolutely. The market will move from areas of low liquidity to high liquidity. So if we have a bias for the weekly liquidity pool, let's take a look at the MACD. Is there any momentum? Well, sure enough, we got an all-time high on the MACD on the weekly chart. So we have a large influence of institutional buying coming into Cisco currently. Let's take a look at the daily chart. Just like Mike was saying, do I use fib levels? No. But is my pullback in between 25 and 75%? It sure is. It sure is. So we're pulled back deep enough. Do I have a 1-to-1 risk to reward for at least the nearest high on the daily, not even considering the pocket pull on the weekly? I do. Let's measure it. $1.64 to $1.52. Not quite, but we could always move the stop up a little bit. We're basically right there. Now, is this pullback to the downside? Is it enough? Has it exhausted? That's where the real skill of trading comes in. Let's take a look at the financials. Cisco. Technology, networking, and communication. Well, technology's kind of been in the toilet. Microsoft had a big plunge down. Apple had a big plunge down. But let's take a look at this company. Dividend of 3.86%. That's good. 71,000 employees. It could always cut and be leaner and meaner. P&E and forward P&E are green. Quick ratio and current ratio are green. It is below 2 of the moving averages and above 1 of them. Earnings per share are all basically neutral. Target price is $29.8068. Just above my first take profit. Maybe the pump and dump of Wall Street is still there. Performance were mixed. Up for the week, down for the month, up for the quarter. It's a pretty mixed bag. Fundamentally, the company looks really good. I recommend you read the actual paragraph of Cisco. So by the book, I like how Cisco looks. The only bad side to it is the sector is a little bit weak. Now, we were talking about the sector being a little bit weak in financials. And since the past 2 weeks, I have a long on COF, which is Capital One Financial. So that doesn't always mean we wouldn't take the trade. It's just something to think about. Any questions on that so far? How do you guys feel about the looks of Cisco compared to the looks of Pfizer? What are your thoughts? Okay, so what Heath is saying, I believe what Heath is saying, is the selling pressure of this thrust has a lot of black bars, which is absolutely correct. That is a pullback that might be too strong of momentum than we would like to see. Is Heath's point valid? Absolutely. The only thing is, there are two rules of thought when you have a strong momentum in the pullback. For one, the initial thrust really wasn't overextended. For two, we have a new low in the MACD from the pullback, but it kind of looks in line with the MACD in general. So it is a new low. It's just not that extreme. It's extreme. It's just not that extreme. Is his point valid? Absolutely. Absolutely. Okay, so I want to talk about a couple things. Since you started to get a feel for the scanning, do that scan, do that exercise every single day. And, put in your 1 hour a day of work into the markets. Something I do is, I write price levels down for the 10 major stocks and just about everything under the futures tab in FinViz, and I write down the price every day. Another thing is I put together a resource site for you guys, which I will show you. It's tradethemovement.com. And I made a free little course, got my picture there. And I did this really as a way to start expressing my thoughts on trading. The course is absolutely free. I highly recommend it. And would love your feedback on it. For two, there's apply for coaching. That is absolutely not for sale. I'm not offering coaching. I just wrote that in there as more of an artistic feel to try to, really express some art side in building the blog and colors and designs and copywriting and use of words. So I'm not offering coaching. I just have that tab in there. But just so you know, I'm really not selling anything, but go through the site. I've made some great resource pages for you guys, and some reading list, and go through the course and tell me what you think on that. It's a real quick course, but I think it's down and dirty. And I made that, I made this resource kind of just as something really to express my thinking and my thought process in the process of trading. As selfish as this is to say, it was more of a way to help me. Of course, I do care about the trading community, but it really did help me crystallize a lot of the thoughts on trading that I had and I wanted to talk about and discuss. And really, we can call that a night with what we got down so far. That was a lot in there. So I don't want to overload anybody and give you guys a little bit of homework. Do that every single day and start writing down prices. Any questions? We got, a couple minutes. Any questions before we wrap it up? Heath, are you asking me something? Yes, I can. Give me 1 second. I'll do that. Oh, just so you guys know, if you have questions, don't put them in the questions, put them in the chat. Let's look at PBCT per Mary. So peanut butter and chocolate truffles. People's United Financial Incorporated. Okay, so a couple things. Let's start from the top. We got really close here, so we've lost a little bit of a liquidity edge in the double top. It's not as good as being shallow as it was at Cisco. The downside looks good for a long. We grabbed the whole pocket of liquidity here. The only thing that I do not like, and I really don't like, is we don't have a lot of momentum in this swing high. Our MACD really didn't make a new high. It's kind of flat. It's less than that one. So you have a little bit of a MACD divergence, if you will, from that one to that one. This should have, I would have liked to see this MACD swing poke high and be the highest by far. So we're lacking a little bit of momentum. Other than that, the pullback seems a little bit consistent with Cisco. We're pretty sharp down. We have no measured move in the pullback. The only thing we do have going for us is we took out that liquidity here and we set up a nice rejection of this price level here. It's financial, so let's take a look at the fundamentals. And target price immediately is below price. So I would not be long this stock. You have mixed performance. You have target price below price. All of your moving averages are red. Your dividend might be a little too high at 4.47. Financials are not currently strong. So, no, I would not be long. Heath, I did a bearish spread on options, vertical and USO recently when I was talking to you at the meeting. Dividends are good, but then they're also, if they're too high, they're not good. Paul, this one's going to be recorded, so don't you worry. Mary, with the long-term buy and hold strategy, that is definitely not my cup of tea. Mine is shorter tactical trading. If you were looking at a long-term, then that's just not my area of expertise. But if you were thinking of long-term, didn't Warren Buffett just buy, $40 billion worth of Wells Fargo? That might be your financial stock of choice if you were going to do finances. But long-term is not my cup of tea. It's very short-term. Okay, great. Well, that'll do it. We'll do another webinar in a couple weeks or so. Feel free to shoot me an email, guys, if you have any requests on anything you'd like to see specific. I will put my email in the link. Reach out to me anytime. And don't forget to go to Trade the Movement and do the course and give me some feedback. That really was an artistic type of thing and not a like professional type of framework that went into that site. So understand that when you're going through it. And it was a pleasure. Thank you guys for coming out. Our lives are busy, but you know, we'll do what it takes to help everybody be a better trader. And over and out. We will talk to you soon. Thanks a lot, guys.